that point in time, gold starts its next leg up. And, in this cycle, I can see it going to 3,000, 4,000, 5,000, higher. It's kind of unlimited. The price of gold is inversely correlated with how much money they print. If they stop printing money, gold doesn't go up. But when they print money, gold goes up. And they're going to have to, but in the math we talked about earlier suggests they're going to have to print a lot of money. Now, they haven't done it yet, but it's coming, in my view. I expect gold, in a year to let's say it's 3,500, kind of conservatively. I think silver is going to break through 50, probably be 75 or $100 within a year or two. So, which is as a multiple, when, it's at 30 now, that's a much higher multiple than the growth in gold. So,
LawrenceLepard, an investment manager focused on gold, silver, and sound money principles, believes the Federal Reserve will eventually be forced to resume printing money. According to Lepard, this action will propel gold prices into their next primary upward phase. He forecasts that gold could easily reach $3,000, $4,000, or even $5,000, as its price is closely tied to money supply growth, which he expects to accelerate shortly. Despite easing geopolitical tensions and inflation surpassing the Federal Reserve's 2% target, gold prices have remained firm. Strong consumer spending data suggests the U.S. economy is not slowing down, giving the Fed no reason to relax its tight monetary policies. Citigroup predicts that gold could climb to $3,000 per ounce, though some believe it could go even higher. Robert Kiyosaki, a renowned author and investor, offers a unique perspective on the economic landscape that is particularly valuable for those investing in precious metals. Kiyosaki predicts that gold will rise to $3,700 by 2024 and $5,000 by 2025, aligning with other bullish forecasts in the market. Lepard also remains optimistic about silver, which he describes as the wild child of gold due to its smaller market size and higher volatility. He expects that if gold reaches $3,500 within the next year, silver could break through $50, potentially reaching $75 to $100. This would represent a much more significant percentage increase than gold's rise. Analysts predict that silver prices could range between $47 to $50 by 2025 under favorable conditions, with further increases potentially pushing the price to $77 by 2028. However, economic challenges and market constraints could prevent silver from achieving significant growth toward $100, as some optimistic projections suggest. Before we dive into this video, make sure to subscribe to our channel and hit the bell icon so you never miss an update.
as we all know, gold broke out. Gold was kind of trapped in a range. So gold did extremely well during the whole COVID thing. My fund did well, and gold did well, etc. And then when Powell slammed on the monetary brakes and stopped the growth of M2 and took rates up to 5.5%, gold stalled, right? And it kind of stalled around 2070. And it was range bound in there from 2020 to really March of this year. So that's 3 years. Almost 4 years. So when it broke through 2070, that was very significant, and that told you that we're back into game on. And the reason I think it did that was I think it could smell what I described about the monetary situation, and so it knows, even though they haven't started printing money again, it knows that they're going to have to, and it smelled it, and that's why it went through 2070, squirted up to 2700. This 27, 25, 26. This is just wiggles because we're going. And one of the things I find interesting, the reason the miners trade so poorly is everyone thinks this 27 is unusual, and we're going back to 2000. And just as a lot of people in the stock market think that we're going to go back to a deflationary world, and inflation's going to get calm, and the Fed, they're believing the Fed propaganda that, oh, we've landed the plane and the 2%'s in sight, and don't worry, it's all going to be good. I think it's all nonsense. I don't believe any of that. Okay. And so what I think is going to happen is it's going to be clear that they haven't landed the plane. It's going to be clear that inflation is still with us to a degree, maybe not to the 9% area, but in the 3 or 4% area, and that's and then ultimately we're going to have a monetary problem driven by the math that I just described about the fiscal situation, and that's going to lead the bond market to sell off hard, or something will break as it did with Silicon Valley Bank, and the Fed will have to come in with the monetary fire hoses and do the one thing they do really well, which is print money. And at that point in time, gold starts its next leg up, and in this cycle, I can see it going to 3,000, 4,000, 5,000, higher. It's kind of unlimited. The price of gold is inversely correlated with how much money they print. If they stop printing money, gold doesn't go up. But when they print money, gold goes up. But in the math we talked about earlier suggests they're going to have to print a lot of money. Now, they haven't done it yet, but it's coming, in my view. And silver is kind of like the wild child of gold. As you know, it's a fraction of the market size of gold, and it doesn't have the big stock out there. It gets used, and which is why it's more volatile. When there's a shortage of it, the price goes much harder and faster. there's a big underlying stock of gold, and so there's not as likely to be a quote unquote shortage. But yes, I mean, typically, as we all know from studying these things in the past, when you have a bull market in precious metals, silver vastly outperforms gold. And so I'm very bulled up and excited about silver, and my fund is focused on a lot of the silver miners for just that reason. And I expect gold, in a year to let's say it's 3,500. Kind of conservatively. I think silver is going to break through 50, probably be 75 or $100 within a year or two. So, which is as a multiple, when it's at 30 now, that's a much higher multiple than the growth in gold. So yeah, they're related. And but silver, just as we'll get to Bitcoin, but silver's more volatile than gold, right? I mean, there's a price to pay. Okay, so silver could outperform gold. Great. Yeah, that's the good news. The bad news is it goes down faster than gold too. So because it's not the same thing. So.
LawrenceLepard recently discussed the prevailing sentiment surrounding gold prices, noting that many investors view the current price range of $2,600 to $2,700 as an anomaly, with expectations that gold could fall back to around $2,100. This pessimistic outlook has also influenced the market, particularly gold mining stocks. Many investors fear that if gold prices decline and inflation continues to push up mining costs, profit margins for mining companies will shrink, leading some to question whether investing in mining stocks is worthwhile. However, recent developments suggest that gold may be on a different path. On Monday, gold gained bullish momentum, trading above $2,670, partly supported by news that China plans to inject further stimulus into its economy. Lepard also pointed out that the pessimistic sentiment toward gold often overlooks how higher gold prices benefit mining companies. In reality, higher gold prices tend to increase miners' profit margins. When gold prices surge, mining companies experience a significant revenue boost due to the higher selling price per ounce, significantly improving profitability. For instance, in 2021, the average gold price was around $1,798 per ounce, 21% higher than the $1,500 per ounce incentive price required for new gold projects. Let's get back to the video.
I think a lot of people kind of believe that this 25, 6, 700 price, it's an anomaly. I'm seeing a lot of models out of Toronto and other places. We're going back to 2,100. You get on Bloomberg and you Google analyst consensus estimate for 5-year out gold prices, it's like 20. It's like 2,000, or maybe 2,100. Well, guys, 5 years out, I think gold's going to be 4,000. So, and I think as a result of that, people are saying to themselves, well, these stocks, if gold goes back down and we know there's inflation, so their mining costs are going to go up, their margins are going to be shrinking. Why should I own them? And so what needs to happen is we need to have that psychological shift where people go, oh, you know what? Gold's not going back down. In fact, gold's going up. In fact, gold's going up a lot. And these margins are, and yeah, there'll be 10% inflation in the ASICs, but guess what? The price of gold is going to go up more than 10% a year. So the margins are going to be growing. And then suddenly everybody will be discounting and building models on $3,500 gold. And I can assure you, my companies that I've invested in, they're doing really well they were doing well at 2070. They're doing great at $2,500 or $2,600 gold. And they'll be just coining and minting money at $3,500 gold. And that's where I think we're going. But I don't think the market believes that. And that's why I think the stocks, but what will happen if this is the way it's worked in past markets, and I've been in this few cycles and watched it historically, is there'll come a moment of recognition and then they'll make up for lost time. So I fully expect, my fund this year is up about 40%. If that moment of recognition occurs next year, and looking back historically, my fund go up 100% in a year. Because they're so undervalued right now. But I know that for people watching this and listening, it's really annoying and it's really painful, and you've got to be really patient. And I'm as angry as anybody about it that it's taking this long. But it's like, I'm not selling. I want to see the next card. And I'm pretty sure, based on historical recognition of patterns and studying everything else, I'm pretty sure the next couple of years are going to be good for us. I'm pretty sure. Last couple of cycles, gold is bigger, more widely distributed, more people understand it. It smells it first. Gold moved first. I said, you should be happy that gold's moving because it means Bitcoin's about to move. And it was about the same amount of a lag time. It was like 3 or 4 months. Gold broke out in March, and no, it was more than 3 or 4 months. It was about 6 months. And then Bitcoin really started moving this fall, right? And now it's moved with great authority. With respect to the Trump thing, yes, I think what happened is, look, gold has had one hell of a year. There aren't a lot of years where gold's up 30%. From 2070 to 2700. That's a hell of a good move for gold. And it was ready for a rest. Bitcoin, on the other hand, had just started to move. And yes, I think the final thing that pushed the Bitcoin move was that the Harris administration, the Biden administration would well, it was Pocahontas, that Warren, Senator Warren hates Bitcoin. They hated Bitcoin. They were giving all the Bitcoin companies tons and tons of trouble. There were a lot of worries about what might happen to it and if Harris won. And obviously Trump has signaled, and Kennedy and others have signaled that they're extremely pro-Bitcoin. And, you've got now Senator Loomis has introduced a bill for a Bitcoin strategic reserve, which would be a huge thing if the U.S. government started buying Bitcoin and putting it on its balance sheet, the way we have gold as a store of value. So I think that the political, earthquake that kind of occurred when Trump won was extremely positive for Bitcoin, and that really added rocket fuel to it. So yeah, I think that's the biggest part of the explanation.
Gold and silver are set for continued growth, driven by inflationary pressures and government stimulus. As gold prices rise, mining profitability will improve, and silver, being more volatile, may see higher percentage gains. Both metals offer strong potential in an uncertain economic environment, with increasing demand likely to sustain their upward momentum. What do you think about the future of gold and silver? Let us know in the comments below. If you found this video helpful, hit the like button and subscribe for more updates. Thanks for watching, and stay tuned for our next video.